Hare Krishna. Welcome to Tax Guru YouTube channel. This is CA Rohanar Pingai, practicing chartered accountant based in Mumbai. Also partner in Motilal and Associates LLP, member firm of Marks Network. Welcome to video series GST Relearn Part 9. Yes, today we are going to discuss provisions related to tax invoice, debit note, and credit note. We are meeting after little bit long time because last week I was not well. So that week actually I'm rested for some time. So I'm unable to make video for you. So now again we have started. Today we will learn tax invoice, debit note, credit notes. Let me allow to share my screen. So today we are going to learn tax invoice, debit notes, credit notes under GST. Let's see summary what we are going to learn. So today we will cover introduction and legal framework, that is relevant sections of CGST Act, the section 31, 34 and relevant rules, rule 46 to 55A. That is purpose of each this document. What? Tax invoice, debit note and credit note. Then we will see one by one tax invoice definition and purpose, time limits for issue, special situations. Then under debit note definition, legal provisions, section 34, subsection 3, when issued, no time limit for reporting requirement, mandatory details, rule 53, sub rule 1A, practical example. And then we will see also credit note definition, legal provisions, section 34, subsection 1, when issued, time limit for declaration, impact on GST liability and practical example. Then we will see comparison table, that is include purpose, timing, GST impact, reporting in returns and time limits. Practical tips and common mistakes, GSTR 1 and ITC reconciliation, correct GST and place of supply, invoice series control, export invoice markings, e-invoice requirements. Then we will see judicial and departmental clarifications like circular number 160, circular number 137, that is credit notes for discounts, and one is for debit notes. Then conclusions and key takeaways, summary of learnings, importance of timely and correct documentation, compliance risk. And then annexures, that is optional sample formats of tax invoice, debit note, credit note, flowcharts for process and timeless quick revision sheets if time permits. Otherwise, we will keep up to the takeaways. Okay. So let's move on. First, tax invoice. What is a legal framework for tax invoice? Section 31 of the CGST Act 2017 deals with the provisions related to issue of invoice. Then Rule 46 to Rule 55A of CGST Rules 2017 prescribes details, formats, and special cases. Actually, what rules is covers? Rules is a directly of formats, tables, charts. It provides us that actually. So read with section 12 and 13, time of supply, to determine the due date for issuing the invoices. Means this section 12 and 13 is related to time of supply, and which is related to the time of issue of the invoice. That is the part of the section 12 and section 13. So that is also relevant, and we already that seen the time limit in the time limit chapter. Purpose of what is the purpose to issue tax invoice? It serves a primary evidence of supply. It is a primary first-hand preference, first-hand evidence of supply is what tax invoice enables recipient to avail input tax credit. Means this is the first condition if the recipient wants to avail that input tax credit. What is the source document is the tax invoice. He must have that tax invoice. Aids GST reporting and compliance and acts as a proof of payment demand. Means you can demand payment based on your tax invoice. Let's see time limits for issuance, type of supply, and the time of issuance. Okay, the type of supply goods, if movement is involved, then time of issuance of tax invoice would be before or at the time of removal. What is the time of issuance the tax invoice when movement in goods involves? Before or at the time of removal. If goods no movement, then before or at the time of delivery or making available that goods. Okay, if no movement is involved, then time of issuance of tax invoice for goods would be before or at the time of delivery or making available. Then if continuous supply of goods, then time of issuance is before or at each statement or payment due date. I mean, in case of continuous supply of goods, the issuance would be before or at each statement or payment due date. Means in case of the construction contracts. Services, time of issuance within 30 days, and in case of banking, non-banking, financial companies, financial institution, 45 days. Okay, so time of issuance of tax invoice in case of services would be normal within 30 days, and normal means the other than bank, non-banking, financial companies and foreign institutions will time will limit will be within 30 days. And in case of that banking companies, non-banking financial companies and financial institutions within 45 days. Continuous supply of services before or at due date of payment or completion of event. In case of continuous supply of services before or at due date of payment or completion of event, you need to issue the tax invoice. And in case of goods sent on approval, then before or at earliest of approval of or 6 months from the removal. Goods sent on approval basis, then the time limit to issuance of tax invoice will be before or at earliest of approval or 6 months from the date of the removal. Next, Rule 46 talks about mandatory particulars. Okay, means what mandatory particulars are required in case of tax invoice. First will be supplier's name and address, and GSTN should be properly mentioned on the tax invoice. Supplier's name, address, and GSTN. These three fields are very, very much important. Then serial number, that is less than equal to 16 characters unique, and the tax invoice should be serially numbered. Then date of issue, then recipient's name, address, and GSTN if registered. If B2C, then no need to mention the GSTN number, but name and address should be prominently displayed on the printed on the tax invoice. Then HSN code or SAC code based on turnover based limits, means 2 digit, 4 digit, 6 digit, or 8 digit. Okay. Then description of the goods or services is also required to be mentioned properly. Then quantity and units in case of supply of goods, taxable value, rate, and amount of tax, that is CGST, SGST, IGST, UTGST, or SES, should be properly columnarized, differentiated. Means it should be properly differentiated. One can identify the separately those components. Then place of supply with state name. For interstate supplies, it is must. What is the place of supply? Means address is of course important, but many times in case of interstate supplies, the address would be within the state, but the place of supply is out of the state. Okay, that is the between the two states. So that place of supply with state name is very much important. Then signature or digital signature of the supplier or authorized representative also should be necessary part of the tax invoice. And QR code for e-invoice applicable cases. Means those are covered under e-invoices, then QR code is also must be printed on the tax invoice. Then now let's see special situations. Bill of supply. For exempt supplies or composition taxpayers, the dealers cannot issue tax invoice as per section 31 subsection 3 clause C. What they issue in that case, they issued the document which is described as bill of supply. Means they can't charge tax, and therefore that document should not be called it as tax invoice. It is called it as a bill of supply. Then revised invoice. For supplies made between effective registration date and issuance of certificate to be issued within 1 month, and that should be called as revised invoice. Means what? If you have issued some invoices between, let's see, 1st August to 15th August, and your certificate date, issuance of the certificate date is somehow 18th August or 17th August, then the invoice which are issued between 1st to 16th or 1st to 17th, you need to revise as a tax invoice by adding the tax component. So that is called as a revised invoice. Then consolidated invoice. For small value supplies less than equal to rupees 200 to unregistered customers. Means in that case, you have to not required to generate tax invoice for the each and every supplier. You can consolidate that and issue one tax invoice maybe, and at the end of the month by taking that date, and you can consolidate those amount of the invoice. But that is small value supplies less than equal to rupees 200 to unregistered customers, that is B2C. E-invoice applicable to notified taxpayers. E-invoice applicable to notified taxpayers, and that currently more than or equal to rupees 5 crore turnover subject to amendments. So e-invoice is applicable to notified taxpayers, and currently they are the turnover limit is more than equal to rupees 5 crore. Self-invoice. When self-invoice is issued where recipient pays tax under RCM from unregistered supplier. When self-invoice need to be issued where recipient pays tax under RCM from unregistered supplier. Means like, for example, you are a supplier, you are receiving service from an advocate, then that will be covered under RCM, and then you have to generate self-invoice to take the credit of RCM paid by you. So these are the special situations: bill of supply, revised invoice, consolidated invoice, e-invoice, and self-invoice. Now let's see compliance points. Penalty for non-issuance is rupees 10,000 or tax amount whichever is higher as per section 122 of the CGST Act, whichever is higher. Penalty for non-issuance of tax invoice within a time limit is what? Rupees 10,000 or tax amount whichever is higher. Then wrong particulars. Mentioning wrong particulars in tax invoice, ITC should be denied to recipient plus penalty will be levied. And invoice come bill of supply not allowed unless notified. invoice cum bill of supply not allowed unless notified. Means you need to separately issue tax invoice and your bill of supply also. Let's see a few of the example. Let's see for the goods. Delhi supplier sells 100 chairs at rupees 1000 to Haryana dealer. GST rate 18% IGST because between the two states, Delhi and Haryana, particulars would be value of the goods 1 lakh, IGST at the rate of 18%, and total would be 1 lakh 18,000. So your tax invoice, this is the amount part we have covered. Else, otherwise, you have to mention everything: name, address, with state, the place of supply, description of the documents, HSN code, everything, whatever applicable as per your applicability. And now we will move to second concept, debit notes. Let's see what is the legal framework for debit note. Section 34, subsection 3 of the CGST Act deals with the debit notes. Rule 53, subrule 1A explains us the details required in debit note. Means what is the part or what is the inclusion or components of the debit note. The rule 53 sub rule 1A describes us that part. When issued, when debit note is required to issue, taxable value or tax in original invoice less than actual. Means many of the cases due to a clerical mistake or in a hurry or maybe some other reason, what is the case, the tax invoice may be get wrong and the original invoice amount is maybe less than the actual. Means we have to for example, we need to raise invoice of 150 and we raise 120. So what is the that the original invoice need to be raised at 150 but we raised at 120. So we need to, at that time we need to raise a debit note. So taxable value or tax in original invoice less than actual, price revision upward post supply. In that case also means uh, after post supply we come to know that there is a price revision and that is at a higher side. So we need to raise a debit note. So price revision upward post supply, additional tax liability discovered later. So both means all these three conditions are like that. We have to revise the tax invoice on upper side. So the debit note is required to be issued in that case. Key points. Separate debit note need not link to individual invoices post 2020 amendment. Earlier, before the amendment, we need to link that debit notes to the individual invoices, but now that requirement is kept aside. Declaration in GSTR 1 of month issued increases the tax liability. Declaration in R1 of month issued means whenever in month in which debit note is issued, in that your R1 has to, we need to disclose it in your R1 and that increase your tax liability. ITC available to the recipient subject to Section 16 conditions. Section 16 of the CGST Act mention the conditions on that basis we can take the ITC credit based on also the debit note too. Then mandatory contents of the debit notes. Like tax invoice, here also we need to mention supplier's name, address, GSTN, nature of document will be prominently displayed as a debit note, serially numbered and date. Original invoice reference should be required. Okay, so the future conflicts will be minimized. The original invoice also need to be quoted on the debit note. Value, tax rate, tax amount, and signature and digital signature. These are the mandatory. Let's see the example. Original invoice 50 laptops at rupees 40,000 plus GST 18%. Latter realized price is rupees 42,000. So 2,000 would be higher than the original invoice. So difference will be rupees 1 lakh That is 50 laptops into rupees 2000 will be 1 lakh plus GST 18,000. Debit note issued for rupees 1 lakh 18,000. Okay, hope you are understand. Now we are moving the third part of today's topic, credit notes. What is the legal framework for credit notes? Section 34, subsection 1 of the CGST Act talks about credit notes, and Rule 53 means Rule 53 gives us the format requirements of the credit note. So section 34 subsection 1 and Rule 53 deals with the credit note. When issued, okay, taxable value or tax in original invoice more than actual, and we need to keep it down. Return of goods, in case of return of goods, post supply discount, and deficiency in goods or services. In all these cases, what is happening is that the tax invoice amount is getting reduced. It is not upwarding, it is downwarding. In case of debit note, the tax invoice amount need to be upward. So therefore, we issue debit note. But in case of credit note, taxable value or tax in original invoice or return of goods or post supply discount, deficiency in goods or services, where the amount getting downwards, getting reduced. So we need to issue credit note. Time limit for declaration. Credit note for financial year must be reported in GST return on or before 30th November of the following financial year or before filing annual return, whichever is earlier. Since there is a time limit to issue, debit note generally issued in the same month. Credit note also can be, but there is a time limit to given us, that is post 6 months after the financial year over, that is on or before the 30th November of the following financial year or before filing annual return, whichever is earlier, we need to issue credit note. Impact. What is the impact of issuing credit notes? Reduces suppliers output tax liability subject to recipient not having availed or used corresponding ITC. What is the impact? It reduces the supplier's output tax liability subject to recipient not having availed or used the corresponding ITC. Let's see example. Invoice 500 shirts at rupees 500 plus GST at the rate of 5%. Total comes to 2,62,500. Customer returns 50 shirts, value 25,000, GST 1250. So credit note value would be rupees 26,250, reduces liability. So credit note should be issued for rupees 26,250. Okay, now we will see a comparative summary for all of these three documents we have discussed just now. That is tax invoice, debit note, and credit note. You can take a screenshot of it. Let's see one by one. What is the purpose? So purpose for tax invoice is a proof of supply, is a primary document. Debit note to increase in value or tax, and credit note decrease in value or tax. So clear what is the purpose? Tax invoice, proof of supply, debit note increase in value or tax, and credit note decrease in value or tax. Timing of issuance of the document. Tax invoice at the time of supply. Debit note after invoice for upward adjustment, and credit note also after invoice for downward adjustment. Impact on GST. Tax invoice creates a liability. Debit note increases the liability, whereas credit note reduces the liability. Return to report, GSTR1 for tax invoice, debit note GSTR1, and also credit note GSTR1. For all of these three documents, the return applicable is GSTR1. Time limit to issue the tax invoice, fixed by supplier rules. Debit note, no statutory limit. You can issue at any time. Credit note, 30th November of the next financial year or before annual return, whichever is earlier. So that is the comparative summary. Hope you have taken the screenshot too. Practical tips and common mistakes. Let's see. Mismatch in invoice and GSTR 1. ITC disputes will be in future you can face. So you need to be match or keep reconciliation between your invoices issued and whatever you have reported in GSTR1 return, that is return of supply. Always quote correct GSTN and place of supply. Means whenever you issue tax invoice, putting your tax GSTN number or the recipient's GSTN number, you need to put correct GSTN and place of supply. And for that, you must have a mechanism to check any mistakes or any clerical mistake. Any type of clerical mistake should also be avoided. Maintain invoice series control, that is avoid duplication. Therefore, this also need to be maintained, the number series. For exports, mark supply meant for export, that is IGST or without IGST under LUT. Means whenever you export, so and also letter of under letter of undertaking, you need to prominently mention on the tax invoice that is supply meant for export IGST, that is with IGST or without IGST under LUD. For e-invoicing, ensure IRR generation before movement of the goods. Very much important part we need to keep in mind is that for e-invoices, ensure that IRR generation before the movement of the goods. Let's see judicial departmental and clarification. The circular number 160 of GST 2021 clarifies that multiple debit notes can be issued for same invoice and date of debit note governs the time limit for ITC. What this circular 160 clarifies is that the multiple debit notes can be issued for same invoice and date of debit note governs time limit for ITC. And what circular number 137 of 2022 GST clarifies issuance of credit note for post-sale discounts. Issuance of credit note for post-sale discounts permissible if conditions in section 15 subsection 3 satisfied. You need to see that separately. Section 15 subsection 3, there is a condition mentioned and you need to fulfill that condition if you want to issue a credit note for post-sale discounts. That is permissible only if you are fulfilling the condition mentioned in section 15 subsection 3. And now we are moving to our last part of today's learning, that is conclusions and key takeaways. You can note down, can take screenshot, mention the pinpoints also, so you can recollect afterwards. So let's move on to the conclusions and key takeaways from today's learning. First, tax invoice is the foundation of the GST compliance. That is the basic prima facie document. It is not just a commercial document, but also a legal requirement for creating tax liability and enabling the input tax credit for the recipient. Means one document which fulfill two basic and two important points and conditions, we can say. That is, for supplier, it creates a tax liability by collecting from the recipient and pay to the government. And on the other hand, it enables the recipient to claim or avail the input tax credit based on that particular tax invoice. Without a valid tax invoice containing mandatory particulars, ITC can be denied. Its department, if in any assessment find out that the tax invoice which a recipient had to claim his or her ITC, if it is not having the mandatory requirements as per the act, then it can be denied. So be properly have a control as a recipient, you have whatever tax invoice you have issued, it is comply. Just see it is complying all the mandatory requirements. Time of issue determines compliance correctness. Time of issue determines compliance correctness. The timely issuance of invoice, that is before removal or delivery for goods and within 30 days for services, is a critical to avoid the penalties and disputes. Means timely issuance of invoice is critical to avoid the penalties and disputes, that is before removal or delivery of goods and within 13 days for services, 45 days in case of banking, non-banking financial companies and financial institutions. Delayed invoicing can lead to interest liability, mismatches in returns, and ITC blockage. So why it should be issued on time to avoid the interest liability and mismatches in returns and also the ITC blockage. Debit notes increase the taxable value or tax after supply. The They allow correction of underbilled amounts or post-supply upward price revisions. Importantly, there is no statutory issuance deadline for debit notes, but declaration in GSTR1 of the period is mandatory. Means there is no time limit to issue debit note, but declaration in R1 of the period is mandatory. Credit notes, whereas for reduces the taxable value or tax after supply, used in case of returns, post supply discounts, or quality issues. Reduction of tax liability is time bound. Credit note effects must be reported before 30th November of the following financial year or before filing the annual return, whichever is earlier. Since credit note has a time limit, which is 30th November of the from the date of the following financial year or before filing the annual return, whichever is earlier. Invoice accuracy directly affects the ITC flow. Of course, it is means errors in GSTN, HSN, place of supply, tax rate, or taxable value can block the recipient's ITC claim and trigger the notices. E-invoice compliance is becoming non-negotiable for eligible taxpayer. Means those covered based on the turnover threshold, that is more than or equal to 5 crore, they need to comply the e-invoicing, whatever the invoicing provisions. If there is no non-negotiable, means they have to fulfill that e-invoicing component. Strong internal controls are essential. Businesses must maintain proper invoice numbering series, track issued, return goods, and reconcile the R1 with sales register. That is, the reconciliation is important part, important statement for every dealer to claim his proper ITC or proper supplies. Means in case of future assessments, it can be reduced or it can support his claims. Automating invoice generation and integrating with GST returns reduces the human error. Means wherever you automate the invoice generation and integrate with the GST returns, it what reduces the human error. So we need to apply a technology in our systems too. Amendments and circulars shape practical application, that is post 2020 changes dealing the debit notes from original invoice for ITC time limits, a favorable move for businesses. Departmental clarification, that is circular 160 of 2021, resolves what disputes but must be regularly tracked. Non-compliance has financial and operational consequences. Means in case of you have non-compliant of anything about the tax invoice, debit note or credit note, any provisions related to that is also mandatory requirement, then it has financial and operational consequences. Wrong invoicing or delayed declaration of debit or credit notes can lead to penalties, interest, ITC reversal, major part, ITC reversal, and strained client or vendor relations too. So that is very much important. So we need to comply and enjoy the GST provisions. So this is all for today. Hope you are learning and we will meet soon. If you like this video, please click on like, do share in your network, and if you're not yet subscribed to our YouTube channel, then do subscribe for latest updates. Thank you so much for patience hearing. Hare Krishna.